Good morning, everyone. This is Chris Brecher with Simpler Trading and the Chart Patterns Mastery Room, an explanation of what happened on August 5th, 2024. We've been warning for this for a while. Now, what are we talking about? Well, a lot talking about the yen carry trade. So what that is a lot of speculators around the world have been greedy. They've been borrowing the yen because it's almost a free interest rate, and they've been using that money to buy the tech stocks and speculative stocks in the U.S. and other places. So what happened is once Japan raised some interest rates, and they didn't raise them much, but they raised it enough to make a difference, then what happened is, and the tech stocks started selling off, everybody went to the exit door at the same time. So on the left is the yen. On the right, I want to show you some risk-based assets. So you had Bitcoin getting destroyed. You had the tech stocks getting destroyed. As you see, you had crude oil get destroyed. You got gold going down. These things shouldn't go down also. And why in geopolitical times, which is heightened, would oil go down $6 in 3 days? All this unwind of this carry trade. Now, we called this last week for a different reason. On the left is the Japanese Nikkei. So keep in mind the Japan market, and this is why I have TradingView, so I can watch all the world markets. I can watch the German, the Spanish, the UK, a number of them. But we were watching this for a simple reason that similar charts yield similar results. That's what we're watching. So you watch the Japan market 2 weeks ago. Now, this was on StockTwits weeks ago. This going down. Right there is July 22nd. On the other hand, the ES was all the way up here. All the way up here. Now, that doesn't mean the ES is going down. But I want you to see this correlation. This is from 2023. You see, you went up. You had this consolidation. You went up. You had this consolidation. You then had the breakout and the new high. You had on the right, you had the breakout and the new high. The difference is the Nikkei fell apart and undercut that. That's April 15th. That was a big tell that this is probably going back around April 15th, which is what it did. But the bigger thing is that when Japan went down, bearish patterns were more likely to work. So there's the Japan, what it undercut. On the right is the bear flags in the S&P on 2 occasions. So when this rallied up to here, now that's another thing to watch. That purple line's the 20. The purple line, the 20 in the Japan, broke it back here on July 22nd. This came back to test it on August 5th, August 3rd, 2nd. So the key is that when this fell apart under everything, then this was more likely to go down. And that's exactly what happened, as you see. So far, that's why markets did that. Now, what happens now? Everybody wants to know what happens now. Well, I look at a number of indicators. One of them is the CNN Fear and Greed. And when you go to CNN Fear and Greed, right now it's fear. Now, why is it fear? It's fear because of 7 different indicators, some of them extreme fear. One of them, and the one I watch the most, is safe haven demand. So you have the bond market yields going down or the bonds rallying while the stock market is sold off. Most of the time when it's this far, you get a really sharp rally in overall markets. And that's what we're getting. Now, if this was different, if this was like it was last year, when the bonds were selling off or the yields going up, yeah, that's when you get bearish on the markets. So, and it went down till this settled down. Settled down. Just keep that in mind. So right now, that's a nice positive divergence with markets and could put a floor in the markets with this extreme fear. So that's number one. On the other hand, like I said, I'm not bearish in here. Not bearish yet. And that's because of the CNN Fear and Greed the bonds, and also that we tested some support. The other thing I'm watching in here is this. I'm watching the weekly charts. Everything getting oversold. Everything getting oversold, including the FXY, the dollar getting too overbought, the Japanese yen. So I wouldn't be surprised to see these test that trend line. Then this test up here at the breakdown. So I'll give you a perfect example. Here's Schwab on the left. So a lot of times I talk about things testing the low. So here's Schwab on the left. Big old sell-off back here on earnings. Came back to a resistance zone. It came back down here where the MACD got to 0. On the right, though, as you see, this hasn't had any kind of real rally to speak of. I wouldn't be surprised to see the ES on the right go back to this area. So to get oversold, get this back to the 0 line in this area. And then we'll look for bearish reversal patterns to short markets. We don't have that right now. So I'm watching that FXY, watching it on a weekly chart, and watching that right now it's way too overbought. I'm waiting to see how it acts in this zone and to see how the U.S. markets act. That's where I am. I hope this makes sense. And what I think of the markets, have a great day. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.